I used to tell people that I could spend $10 on a Big Mac or whatever, and then I was getting a yield on my Big Mac. My Big Mac had a 10% APY.
Is not all APYs are created equal, as we talked about.
A lot of new users might be enticed by the 5 billion % APY farm, but they don't realize that you can get giga-wrecked in that.
It's very important to know that you're trading off upside in order for earning a return with an APY. Beyond APY, what are the risks you're taking? APYs miss risk.
Hey guys, we're back again for the Next Billion podcast. We're here in Lisbon talking to the builders that are helping onboard the next billion people into crypto. We're talking to some really awesome people here today. I guess one of my good friends in crypto as well. We've got some of the Friktion team here. We've got Uddhav from Friktion.
Yeah.
Thanks so much for coming on board, man. And yeah, how are you going? Enjoying your time here in Lisbon at Breakpoint?
Yeah, thanks for having me. It's been a fun Breakpoint so far. I was here for the Hacker House.
Yep.
Spent a couple of days getting to meet some of the new teams building on Solana, seeing some of the projects coming out.
Yeah.
And this is the first time all of the Friktion core team is in the same place. So
oh, wow.
It's
so
pretty
you're
exciting.
seeing people for the first time as well?
Yeah. Seeing 3 of the team for the first time in person, which is pretty awesome.
Nice. So they're not just a JPEG?
Yeah, they're no longer JPEGs. They're all 3D now.
Oh, 3D? Jeez.
Yeah.
Is that good or bad? I don't
It's
know.
bullish.
Okay, it's bullish. All right, awesome. Cool. Well, maybe we can start. How did you get into crypto? Maybe a little bit about your background.
Yeah.
How did you come to having, founded Friktion and being here in Lisbon?
Yeah. So the start of the story probably was when I was a sophomore in college. I went to university in Texas, and at that time, a lot of people in Austin were starting to get into Ethereum and EOS and various other ecosystems, and started to read a lot more. I think
this is like 2017?
Yeah, 2017, 2016, 2017.
Okay, yeah.
And a lot of my friends were starting to read white papers and sharing them with me, and at this point, I still thought it was kind of magic internet money.
Yep,
Which it is, yeah. And I think there's the whole view that it took me a while to understand Ethereum or ETH is money, and there's a lot of crypto assets that really try to become a new form of monetary policy for the world.
Yep.
That is censorship resistant, permissionless, and has no trust reliances. So
Yep.
that part was very exciting to me. Started to read more into the kind of math and science behind it, and I came from a petroleum engineering background. So
okay. Wow.
I studied rocks.
Oil wells.
Yeah, I studied rocks and worked on energy projects for a couple of years during college. And then after college, I ended up joining a commodities trading firm in Chicago. Worked on gasoline, crude oil, and carbon derivatives. So very much on kind of the physical and future side.
Wow.
And you combine that with the idea of fixed income, and it's kind of what crypto assets can be, right? You have some pretty interesting properties with proof of stake. You have some pretty interesting properties with proof of work that very much could look like commodities. So I find it quite interesting that the crypto world opens up opportunity for people to just build things the way that TradFi doesn't. And that really got me hooked. And then Friktion particularly came out of the hackathon a year ago,
right?
Solana Ignition. And we were really trying to build risk management for DeFi, because what we saw lacking in DeFi across ecosystems was the ability to know for every dollar of risk that's taken, what's the net reward that's earned, net of fees, net of transaction costs, net of all these things.
Yeah.
And for us, the idea was let's build real yield strategies that provide returns to users that are risk adjusted.
Hold on, real yield. I guess we kind of know what yield is, or maybe some people don't. Okay. We went through 2020, we got shitcoin farms coming up, and they're pumping out coins, and everyone's I remember Yams. I loved Yams.
Yep,
Did you get into Yams?
Yeah, Yams, Basis Cash, all of these
all
these projects in DeFi summer really got me hooked onto DeFi. And
right.
I think that was the first kind of exciting use case was you can generate yield.
It was,
right?
And it was kind of a new thing, because I guess 2017 it was all about, oh gee, I'm gonna buy a coin. Oh, I hope it goes up one day.
Yeah.
And it's then you're just sitting there, sitting on your hands, right?
Yeah.
So I guess having a yield on a coin as well. It's cool. I can buy the coin. Maybe it moons, but also I can get a yield on it as well. So
exactly.
It was a compelling value proposition. I think everyone ran with it. It was really good.
Yeah, it bootstrapped a lot of new users into the ecosystem. It gave DeFi a truly first kind of novel use case with the way you use tokens to incentivize an economy, to create bootstrap users, things like that. But for me, what real yield is a way to generate returns that are on a risk-adjusted basis. So things that are non-inflationary, meaning they aren't a result of a number going up in terms of the number of tokens that are emitted to you.
Right, that's key, right? Because a lot of how those early farms worked is they would just pump out coins.
Yeah.
And that's where a 10 billion % APY would come from. And it's cool, that's good, but I guess it's good for a certain point of time until it's not. Yeah. And they would be pumping out coins, right? And then people would just get the coins and instantly dump them. Yeah. And then the coin price would go down, and then the APYs would go down, and then everything goes down.
Classic cycle of yield farming, right? Is you get a reward and you sell the reward because everyone, most of the world books their P&L in USDC, right? If you want to do something with that asset at the end of the day.
Yeah.
Right? So what are strategies that don't require reliance on number going up?
Yep.
Essentially is one way to look at real yield.
Right.
Right? And how we think about that is every strategy that provides real yield has to have some known risk. So for example, we have call selling strategies that sell volatility. You have funding rate strategies that take advantage of the funding rate of a perpetual or the basis of a future. And then you have interest rate strategies that take advantage of the interest rate that a borrower is paying to borrow an asset. And these are properties that are functions of the part of the market cycle you're in. They're part of the volatility of the assets. So it's much different than, I would say, the OG yield farming in DeFi in 2020, where you were getting a bunch of comp token for providing liquidity on an over-collateralized lending platform. So,
man, I paid my rent with that comp token one. When they were paying more in rewards than it was to borrow.
That was a juicy period of
I used to tell people that I could spend $10 on a Big Mac or whatever, and then I was getting a yield on my Big Mac.
So that's awesome.
I took my Big Mac had a 10% APY.
Yeah.
So you mentioned a few things there, right? Futures, options, and other areas where people are trading and transacting, but like someone is borrowing, someone is doing something, someone is paying a fee to someone else.
Right.
There is, I guess, what you say, like risk involved. There is that yield that is coming from. It's not coming from just minting coins.
Right.
It's actually like a payment which someone is paying to someone else for some sort of service. Maybe that's liquidity to then go long or short with, or something like that, right? So I guess the distinction, correct me if I'm wrong, between like real yield and, I don't know what we would call it if it's fake yield. I mean, it still exists, but it's...
You could call it like inflationary yield
yield,
non like risk adjusted returns. Maybe.
Right. And I guess the difference is like you're not just printing coins, there's actually someone that's doing it. So that's what Friktion does, right?
Yep, that's our bread and butter. That's what we like to focus on, and maybe you can run through the vaults if that'd be useful.
Yeah. Tell us about the vaults.
Yeah.
What's going on?
So vaults are kind of our spin on vaults, the traditional concept created in DeFi, and for us, it really started with the idea of volatility as the first source of return as one of these things. So every crypto asset is volatile, and we know that from being in crypto for a while.
Yeah, unfortunately.
And in this part of the cycle, we've seen vol go very high and then come back very low. And it's proven that it kind of correlates a little bit to traditional assets, but what the first two vaults do, which are selling covered calls and cash secured puts, is they're selling upside or downside volatility on underlying asset like Bitcoin, Solana, Ethereum, and using that volatility on a weekly or bi-weekly basis to generate some premium or option premium. And that premium, it can be annualized and can be looked at as a form of yield. But the important thing is not all APYs are created equal, as we just kind of talked about. So in our case, it's very important to know that you're trading off upside in order for earning a return with an APY on the first vol, let's say. So that's the first two. They're kind of upside vol and downside vol.
Just quickly on that, right? So maybe just walk us through the process, right, of an option, and you talked about premium as well. And then that gets reinvested back into the underlying or something like that. So, okay, I have a coin, right? And I go to the Friktion website. I see that you've got a ton of those vault number ones with a whole bunch of different coins. What's sort of going on behind the scenes there?
Yeah, great question. So let's say, what's your favorite asset to
Step.
Deposit? Let's say you have Step. So you have some Step token, and we know Step token is volatile. Right? So when you want to decide where to sell an option, it requires a lot of parameter setting, right? So you have to come in and individually to do this, you would have said, I want to pick a strike, meaning the price at which I kind of have that right but not obligation to buy it as a buyer, option buyer. You have to pick the expiry, so the maturity at which you're selling that option so a period of time. And then you have to kind of use that information alongside the volatility of Step to figure out what the delta is, or kind of the moneyness of the option, to figure out what all the parameters converge to, and then what the return you're going to be able to get is. So the key summaries here are, in order to earn some yield in Vault 1, what you're doing is, if Step is, let's say, $1 today, and you think it will be less than $1.50 in the next week, you can sell a $1.50 call expiring next week, and if it doesn't expire above $1.50, less the premium that you're earning, which is the cost of that option, you're making a return.
Right.
So that's essentially how a covered call strategy works.
Right. Okay. So the yield is actually coming from someone literally buying an option.
Exactly.
And there's some money there which they're using to buy, and if the option gets exercised, then great, that money's no longer available. But if it doesn't, then that gets reinvested back into the underlying, and that's where the yield comes from, right?
And that's where the compounding happens, exactly.
Right.
So let's say it doesn't expire in the money, so it expires out of the money, meaning the option's worthless. That premium all gets auto compounded and put back in. So the next epoch or the next week, it's selling more Step calls.
That's super cool, and it's also, a lot of these different tokens, they have their own staking or mechanism or something like that. But often that comes from, like you say, inflation or some sort of mechanism that's not that, I guess, reliable. But with this sort of method that you're describing, like there's always going to be a yield there somewhere. It's just about sort of judging sort of what are the parameters and the bounds for the price of which you're selecting for each token. Like, is it going to pump this much before the end of the option expiry?
Yep, exactly. And it's a function of volatility too, which crypto assets have always been more volatile than traditional assets, which is an interesting property to take advantage of.
Yep.
Obviously that changes depending on where you are in the market cycle, but yeah, exactly it. Yeah.
Awesome. So that's Vault 1, and there's a whole bunch of different ecosystem tokens that you guys got. You got Sol, like MSol, obviously Step, Samo, a bunch of others.
A lot of awesome tokens in Solana ecosystem.
Yeah, awesome.
And across,
Absolutely. And then, but you've got a ton of other vaults as well. Like, tell us about some
We
of the
do,
vaults.
yeah. So as the same way we compared Vault 1 to selling upside volatility, Vault 2, you can think about the exact inverse, so it's selling downside volatility. So you're betting that, let's say, if Step is $1, it's not going to go below 75 cents in that week. And with Vault 3, you're doing something very novel, which was created by the team that built Power Perpetuals, which is essentially a perpetual squared. So it takes the properties of an option, i.e. the convexity of an option, and it removes the strike and expiry that you normally need to set an option like we were talking about for the first 2 volts, and it abstracts this with a funding rate. So essentially, you're now trading Bitcoin squared perpetual instead of a Bitcoin perpetual.
Right.
So that squared perpetual has a funding rate that is related to the variance or the volatility of Bitcoin as an asset. And by harvesting that funding rate, similar to how you would harvest a funding rate on a basis strategy on a centralized exchange, let's say, you can harvest a funding rate of this in a delta neutral way by hedging it with the underlying Bitcoin perpetual.
Right.
So what that does is it creates you this straddle looking exposure. So you're not taking a bet on the directional move of Bitcoin, rather you're betting that it stays in a range during a week.
Right, okay. So if you don't have a particular opinion on which way the market's, let's say the markets, you think it's just going to be flat. Your Bitcoin's been around 20K for a while now, right?
Right,
so maybe you just think it's going to stay there. You think it's going to be within, the bounds of, 23 to 18 or whatever it is.
Yeah.
Then you could potentially make money using this type of strategy, right? And
exactly.
you're just sort of harvesting that funding rate and putting it back into the underlying.
Yeah, that's a good way to think about it, hence the name crab strategy. So it bets that Bitcoin kind of crabs around and stays in a range.
I like it.
Over the course of a week or however long the epoch may be. So yeah, exactly, just harvesting directionalist volatility.
Nice. And so that was the 4th vault that you guys, but you have...
Third vault.
Third vault, okay.
Yep. The 4th vault was a basis strategy.
Right.
Which was running a basis position, so a simpler version of the power perp.
Okay.
Delta hedge strategy, so it's long the perp and short spot to collect funding when it's negative.
Right, and so just I guess for those not aware, like perps, there's always the funding rate.
Right.
It's a price that people, longs and shorts are paying to each other depending on if there's a lot more people that are longing a coin versus shorting, then the people that are longing have to pay the people that are shorting, right?
Yep.
So there's some money there that if you're on the other side of it, you could make, right?
It's a really good market balance mechanism, right?
Yeah.
Because it's saying there's a bunch of longs here and a bunch of shorts here, and whenever there's an imbalance, it charges a fee to the one where there's too much of, right? So it's a natural balancing mechanism, and then by coming in and being the ones to kind of close the gap, the strategy enables people to do that.
Yeah. I guess so. Okay, so actually a lot of these things, one of the things which was amazing when you guys came along was options and these different strategies, covered call options and whatever. These are hard things for perhaps new people to understand and get into, right? And you maybe have to have some sort of background to really sort of set something up manually yourself.
Yeah.
But then you guys came along and you just made a vault, and it's like, here is a button, you press it, you press deposit, and then
it's automated.
Everything just happens, right? Yeah. So I guess for you guys, like building the Friktion protocol, there's probably a bunch of things happening behind the scenes.
Yep.
Maybe you're relying on data feeds, oracles,
oracles
liquidity
like
pools,
Pit, Switchboard, to provide the settlement price.
Right.
Of that,
Yeah, and then I guess liquidity as well is an important thing. So yeah, I guess you have to tap a lot of areas of the ecosystem, right?
Yeah, there's so many things that Friktion interacts with as a protocol when it runs a vault, right? There's an order book that's created on Serum that requires a maker and a taker. By depositing into the strategy, you're a taker. And makers need to show up and bid during what we call the channel RFQ auction. So it's a request for quote auction, which option buyers can come and bid for that underlying flow. And that's quite non-toxic and very reliable flow to get for a maker. So there's no real expectation that you're going to get adversely selected if you're coming in to bid for this. And then we use Pit and Switchboard for the oracles to settle the price of that step coin at the end of the epoch. Right. So when it expires, there's a 1 hour time-weighted average price that's taken that is used to determine the settlement price and to mark whether that option was in the money or out of the money, and determines the profit of the depositor.
Right, and the product as well is very, I guess you would say, retail focused at the moment. Like it is just open for everyone. Like it's definitely a DeFi protocol. anyone, you just connect your wallet, you get set into that.
Yeah.
Has that been your main sort of customer segment for now? Is just sort of focusing on retail, or are there other sort of areas that you're looking to tap into?
Yeah, great question. So we, historically, when we launched Friktion, the idea was, let's take these kind of complicated strategies that are often gated in the traditional world and aren't really available for users, and just open that up.
Yeah.
Right? Let's build some really good permissionless infrastructure that anyone can access. And now our front end's open source as well. So
cool.
If you want, you can clone your front end and build it and do your own kind of version of Friktion.
I love the analytics that you guys have. By
yeah,
They're
and
like
analytics is
super
all
intense.
All the APIs
amazing.
are there. Yeah.
Yeah.
So you can see all the analytics. You can see performance data. You can track your portfolio value. And now the interesting segment we're going into, which kind of answers your question, is initially there's a lot of activity in DeFi that was driven by just general customers or users that are coming into the platform through a referral, word of mouth, or some normal marketing venue. And now what we're really focusing on Friktion is how do we, to answer the question of the podcast, is how do we onboard $1 billion of TVL and 1 billion users into Solana DeFi or into DeFi protocol.
Which is better, by the way? Like I was having this discussion the other day. Like, is it better to have one guy with $1 billion or 1 billion people with $1? Like, what would be?
This is a good question.
Yeah, what would be more healthy for a protocol, or I don't know, any project to aim for? What do you think? Or like, I don't know, or do you care?
Yeah, I mean, I think at the moment, even if there's 1 billion real people with the dollar in, that's just a massive game changer for DeFi.
Yeah.
Right, and they may have been like airdropped $1 worth of some like NFT that they sold and they got some SOL, and now they're wondering what to do with it. For me, that would be amazing for the retail side of the business. For the institutional side of the business, let's say BlackRock comes into DeFi, or some traditional asset manager comes into DeFi and says, hey, we think there's a real way to build better financial infrastructure and use the settlement and execution layer to do all the things that we're doing in the traditional system without the inconvenience and opacity of the process that we use today.
Yeah.
So there's a situation, and I see both of them working. But yeah, just having 1 billion users in DeFi would absolutely change the game for us. Yeah.
Yeah. Well, I think what you guys are doing is that the real yield product is super important, because it's also something that maybe a lot of new users don't understand as well. Like, they might be enticed by the 5 billion% APY farm, but they don't realize that you can get giga-wrecked in that one as well, right? So like actually seeing something that, okay, this is a yield that's not just inflationary coin X, whatever. It's okay, there's real people behind this, people are taking real risk. And this is something that, people should consider, especially if they're looking to get a yield on coins which they already own.
Yeah.
Yeah.
Exactly. So it's like beyond APY, what are the risks you're taking? And to the analytics page you mentioned earlier, and to the analytics you guys work on too, is like, our goal is to be maximally transparent, right? If you're building DeFi, the idea is you should never hide anything, because you can never hide anything. It's all on chain.
Yep.
Right? So we want the user to understand, or anyone who touches the smart contracts to understand the risks they're taking, the historical performance, how the strategies work, the mechanics of them, all the contracts. So just being really transparent is, I think, one big advantage DeFi has that we can't sacrifice.
Yeah, absolutely. And as well, I guess you mentioned the institutional side as well, and maybe getting them involved. Is that a focus for you guys, or sort of how are you looking to tackle that? Like, can you just walk up to BlackRock and be like, hey man, do you want to like get a Phantom wallet and just like, deposit some money into this? Or how do you approach that conversation? Yeah,
this is a fantastic question, and a lot of DeFi now, I think, has to go to institutions in order to scale, and we're launching Friktion Institutional, which will be launching at Breakpoint. Maybe this will be historic at that time, but so Friktion Institutional essentially is our way of going to the traditional world of institutions, from family offices to custodians, and saying, this is how you can offer any end user who has a requirement when it comes to reporting, taxes, accounting, custodians, to access DeFi. And our strategy there is, all of our strategies are real risk, right? So there's natural demand for risk in the market, right? And whether demand for risk is going risk off or risk on, it influences the price of the product at the end of the day. So we really focus on tapping into those institutions who are crypto curious, are trying to move beyond just the long only part of crypto and beyond just holding spot assets, and trying to find ways to both earn returns and actually participate in like kind of new economies, right? For example, the credit product that is the first product for Friktion Institutional will enable under-collateralized lending and borrowing between counterparties who are creditworthy. And that's determined by a third-party underwriter, as we call them, a loan conductor.
Right, so it's not you guys, it's someone else who that's literally their job.
Yeah, so there's a credit vehicle, essentially, that it allows anyone, and what we're doing as Friktion is just creating the infrastructure for this. So it says anyone can come in and spin up a sub-vault or a pool, and in that pool they can decide who the borrowers are and who the lenders are.
Cool. So okay, these boomer TradFis can come in and they can make their own pool, right? So maybe these TradFis, they don't want to lend to Mega Dude 42069, like they could go and make a pool that BlackRock's lending to whoever they're already comfortable with, but they're utilizing the mechanisms of what you guys have built, right?
Yeah, so they utilize on-chain execution and settlement, which are two important things that they want to access because it's fast, it's reliable, and it also allows you to know your counterparty very clearly.
Yeah, it's all transparent, right? You literally just check the chain.
Yeah, and you provide the right indexing and the data that they need, and they're simply just running a credit book on-chain.
Yeah.
Right? And it's up to them as the conductor or the underwriter of the pool to determine the counterparty's creditworthiness on the borrower side.
Yeah.
And it requires a lot of due diligence. And oftentimes, most of the assets of the counterparties today borrowing under collateralized in DeFi are not on-chain. Right? So how do you monitor these things?
Yeah.
Well, there's novel solutions out there that monitor centralized exchange API keys to track the balances of a market maker or a borrower on the centralized exchange and relay that information on-chain so that the borrower and the pool and the lenders and the underwriter know what the risks that the borrower is taking.
That makes sense. Yeah, I've always thought that. Because a lot of people, they're talking about like real world assets and stuff.
Yeah.
And it's like, okay, cool. Like, let's just say that I have a real world asset. Like, who knows? Like, is it liquid? Like, let's say I have a bunch of property and I want to lend against that. Like, it's not really liquid. What if it gets wrecked?
How do you value that, right?
Yeah, how do I
value it? It's not a liquid
it?
Market.
Exactly. Especially I've been doing stuff on crypto as well, where people need instant settlement. Like, I'm not going to be able to settle that transaction perhaps if that's my collateral. So I guess, as you said, like using API keys or balances. But it comes back to, I guess, what you said, crypto curious.
Yeah.
That was pretty cool. So there are a lot of these boomer funds which are crypto curious, right? They're already engaging in buying Bitcoin or holding or whatever.
And that's the first step, right? You have to get long a spot asset and wear that risk for enough time to get comfortable with the asset class.
There's a lot of them there. And so I guess that's a deep pool to sort of tap, right?
It is, yeah. I mean, the traditional debt markets are 120 trillion in size, right? And DeFi credit under collateralized today guess how much it's originated? Like
DeFi under collateralized lending?
Yeah.
A couple $1 million or something.
It's less than 10 billion. So
okay.
It's a tiny little fraction of the pie of the overall credit market.
Right.
And it's because to scale, it needs a lot of these like custody solutions, and that's a big one too. Is like, for example, BlackRock is not going to want to use Phantom, right? They're going to want to use a qualified custodian,
right?
Which is boomer speak for someone who they can trust and has insurance for any assets that they're holding on the behalf of BlackRock.
Right.
Right.
Yeah. It's not just like some dude with a ledger under his desk and being like, yeah, man, I hold the $10 billion right here.
Yeah, and there's insurance behind it, and there's someone providing the insurance, and there's some guarantee that person won't rug your assets, right?
Yeah.
And one quick solution to this is how can you use things like Fireblocks or Wallet, which uses Wallet Connect,
right?
Which essentially allows you to connect. If you use Fireblocks, who has, I think, transacted like $3 trillion worth of assets on their platform.
Yeah, they're huge. Yeah.
And we're the first Solana app to enable Fireblocks access, which is awesome because now it doesn't functionally matter what chain we're on because you're using Wallet Connect. And the Wallet Connect experience, as long as you have a Wallet Connect account and you have a Fireblocks account, you can touch a DeFi app.
Right.
So you're already onboarded with Fireblocks, you've done your KYC, and you've onboarded the platform. Now you can use the apps that Fireblocks enables to access a permission form of DeFi.
Yeah.
Right? And we can create all the exact same Vault infrastructure, make it permission, and allow anyone to access that with the comfort of their Fireblocks. And sometimes at the end of the process, they're curious for the first time, well, what chain is this on? Like, how does it work? And they don't realize it's a Sol versus ETH versus some random L2. And eventually we think that's kind of a big part of the experience is.
That's actually amazing. That's like this, the fat protocol thesis. Like, do people care about the app that they're using or do they care about the chain that they're using?
Yeah.
And I guess what you're getting to is like, people are using the app.
Right.
And, they don't have to know the underlying chain or maybe they don't even care as well.
As long as it's reliable.
Yeah, exactly. Reliable, and as you said, like they can just access it. They don't have to, twirl around 3 times and, put a hat on their head to actually like get into the system, right?
Exactly, yeah.
Yeah, okay, that's awesome. Cool, so I guess new institutional products launching very soon. Probably by the time this goes live, it'll be already around. So.
Middle of November, so.
Right. So what's sort of next on the horizon for you guys? Like you're here at Breakpoint, talking to a bunch of teams.
Yeah.
We've worked together for quite a long time.
Right.
Love what you guys do. But yeah, sort of what's your take on maybe just the people that you met or what's the future of Friktion look like?
Yeah. Well, the energy of Breakpoint so far has been awesome. I think we came out of Breakpoint last year, really came out of the hackathon about a year ago, and we're celebrating our first year on Solana mainnet beta.
Hey, nice.
Very,
Congrats.
very shortly, which will be exciting.
Feels like 10 years, man.
Yeah, I know. It's crazy. Like we basically launched at the top of the market. So it's been an interesting experience learning and building as things on the screen move up and mostly down. But that's been a lot to learn is just kind of putting our head down and focusing on what we want to get done. And on the topic of what we want to get done, I mean, we've learned a lot about how DeFi really touches the end user. through what happened in the crash of March, April, May, with CeFi institutions basically taking DeFi protocols, adding risk, and offering it to a centralized customer, and abstracting all that to them, right? So one lesson coming out of this is when DeFi integrates with things, for example, if you use Friktion's SDK and you're a wallet, like Ultimate Wallet, for example, you curate an experience for your user, being a consumer app, such that they can access real strategies in DeFi, and really think that's one big way in which DeFi can go to the masses. And some people say it's gaming, some people say it's NFTs. To me, like these consumer apps like Ultimate, Otter, different wallets that are building really exciting features for users to touch DeFi through are really how normal customers will interact with DeFi.
Yeah, I think that thesis has kind of been proven by, a lot of these things blew up this year, like the Celsiuses of the world and Voyager and whatever else. But like the reason people went to them is that they were looking to get a yield on something. And they didn't realize that there's actually like a ton of underlying risks and all this kind of stuff. But like, I think if you're going direct to DeFi and you can easily like be able to connect to that whole ecosystem, it's kind of, what we saw this year was that DeFi was fine. DeFi lenders, they didn't blow up, they didn't like hide customer funds and blah, blah. Everything's transparent, everything's there on chain, right? So clearly that seems like the way that we should be going.
It forces transparency, as we were talking about earlier, and the idea of transparent risk management is going to become fundamental for a DeFi protocol to survive. Right? You're going to have to be stress testing your risk metrics. You're going to have to stress test your protocol economically, logically, and just try to break it. That's the point of DeFi, is that we have all this code that gets hardened over time. And as it gets hardened, people build trust, right? We just saw JP Morgan do their first transaction with Aave on Polygon. And I would never have expected that. I wouldn't have thought that's coming for the next couple of years, right? But it's fantastic to see that, right? Because it shows you protocols like Aave that have very active risk management, whether internal or external, use governance to enable that even better way. Take advantage of some of the properties of DeFi to get users on.
Cool. So I guess, for you guys, the future is like getting the institutional product out, meeting a lot of the other teams here at Breakpoint. And you've already got the open source API, so anyone can really build on what you're doing. Is there any sort of other sort of major things you have on the horizon, or are you really just sort of looking to grow TVL? Is that the metric to focus on?
Good question. So I think the metric for us really is the number of clients on the institutional side that are impacted by Friktion. TVL is kind of a byproduct of it, and oftentimes kind of like APY, it misses part of the picture. Like APYs miss risk, TVL misses volume. So one of the exciting milestones we just hit at Breakpoint as well was 3 billion in volume. And that's from the first year we launched, almost a year since we launched.
Congrats.
So that's another big one for us, is really how much flow happens on the platform. And this is feeless volume. Like there's never been a single BIP charge for volume on Friktion, which we also think is a DeFi value that people will come after.
I think a lot of people focus on one metric or another, but really, like lenders definitely care about TVL, let's say, right? But you can't just have like one wallet providing all of the TVL, because that doesn't really give you a healthy picture of what's happening. So there's definitely like a mix of different things, right? So as you say, volume, TVL, number of users, whatever it might be. Like, are they big users, whales? Are they small users? What's the percentage of that? Like, I guess you guys are looking at all of those different kind of metrics as well.
Totally. I think the biggest core metric to Friktion is like the diversification of the platform when it comes to the strategies. Like, where on the efficient frontier of DeFi does it sit? And then what's the diversification of the users look like? Is it all just one big whale? Is it 10 whales? Is it nicely distributed? What is that kind of, is there fat tails there? And thinking about that as like, where do we want to go? I'm not sure if it's going to be a lot of whales or a lot of retail, right? And when the bull market's there, maybe a lot of retail. When the bear market's here, and institutions who've been sitting on the sideline waiting to deploy dry powder are oftentimes the first ones to come in and start to take real risk, because they want upside in a levered way, maybe with an option, without a liquidation, right? So a lot of different use cases. And we are focusing on our new efforts on the institutional side to get the credit product to market and really build a really robust institutional credit marketplace. And at the same time, offer the same Friktion vaults to anyone who wants to access it via the contracts or the SDK or the UI.
Nice. And you mentioned before, before we started, you had a learn page or something, right? Like
yes.
Education. Education important, or how are you guys approaching education?
Yeah, as you said really well earlier, education is kind of the gateway to DeFi, right? And the thing about DeFi is it combines the complication of a smart contract with a financial primitive. And oftentimes just learning one of these itself is very hard. So now if you're having to learn both of them together, it's extremely challenging. So one thing that we work on, you guys work on, is learning, right? And we're also excited to launch Friktion Learn soon, which will essentially enable a 0-to-1 DeFi education, kind of like an academy. So there is no DeFi academy today.
Love it.
Where you can objectively learn about primitives in DeFi. So everything from a stablecoin, a liquid staking derivative, to a concept product AMM, to order books, and different forms of yield farming. we want to have an objective resource where, for like you and I, for the first time we learned about DeFi was we threw in like 1,000 USDC into some strategy and watched it go up and then fall all the way down.
Yeah, exactly.
So avoiding
maybe you
users
win, maybe you
doing
don't.
yeah, avoiding that in the future and letting people take risk by like giving their time to educate themselves and then making a decision how they want to deploy their own assets in DeFi.
And I think that's an area that's lacking at the moment, really. Like I see it as well, here at the conference. A lot of people, what's an AMM, what's a collateralized call option or something like that. Like it's quite a difficult concept for people that, maybe have never thought of that or don't even know that it exists, right? So there needs to be some sort of resource as well. And that's amazing what you guys are doing. So yeah, I guess where can people find more about Friktion, like Discords, Twitter?
For sure. So Friktion has open source UI hosted at friction.fi, Friktion.
Yep.
So Friktion with a K.
Check it out.
And we're on Twitter at friction_labs. And then we're on Discord at discord.gg/friction. Again, Friktion with a K. And then besides that, we're kind of always trying to be everywhere where we can, trying to offer support to our customers. So anyone who uses the Friktion UI can access something like Intercom to get live support. You can create a Discord support ticket if you have any questions. And if you're interested in the institutional side, you can drop us an email at institutional@frictionlabs.com.
Amazing. Yeah, look, at the Step team, we love what Friktion's doing. We have for a while.
Yeah.
I
love to
think,
work with you guys.
Yeah, look, I think what you're doing is amazing, and it's really simplified a complex sort of series of steps which people didn't even know was possible. To be honest, I wasn't thinking about a lot of the options, strategies that people could deploy in DeFi before you guys came along. And really, you just made it really simple for everyone. It's like, here's a UI, here's a button, like here's some parameters you can monitor, here's the analytics, like, it's all there, which is amazing. So
I love to hear that.
Yeah, absolutely.
Gets me really bulled up about DeFi in this next cycle.
I love it. Yeah, absolutely. So check them out. Thanks so much for coming on the podcast.
Thanks for having us.
And it'll be a pleasure. We'll talk again soon.
Yeah, always a pleasure to talk to you guys.
Thank you so much.
Cheers.